traders, welcome to Charts and Coffee. Happy Thursday, Yang. Hope everyone had a very nice day off, or if you didn't, I know actually I had some folks that I know working yesterday. but for those of you that enjoyed a nice day off, again, happy Christmas. And we're going into the continued low volume zone of probably this week. Now, if you think about the calendar and when those last trades for year end would have to go in, that'll be Monday mostly, maybe Friday. If you think about tomorrow, there's three full trading days left this year. It's today, it's tomorrow, and it's Monday. Tuesday is a half day. And then, of course, we have Wednesday with the bank holiday. And I would presume normal trading, that's a question I get quite a bit. Rob, when does sort of normal trading resume? And that will likely be the week of the 6th, because non-farm payroll is pushed out to the second Friday of next year. All right, so that being said, let's take a look at what we've got here as we kick off our morning. And we're taking a look at the daily time frame. Yes, there might be some intraday setups to be had. Again, I would definitely exercise some caution. It's kind of like the last 2 weeks of August where, the markets are open, but what kind of attention is there in terms of, in the case of summer, last 2 weeks of summer in August, or here in the case of the last 2 weeks of the year. And then again, we're going to see some specific windows of price action. Now, here's the thing to think about. If there was a performance chase, if there was some window dressing, likely, not all of it, we can never account for everything, but the bulk of it was likely done at the end of, or even actually throughout November. And so one of the questions is, what is window dressing? So it's exactly what it looks like, Andy. It's exactly what it sounds like. So if you're walking through a mall, what do they always put in the window in front of the storefront? They put the nicest outfits. They put the best goods. They arrange it in the best way. It's meant to entice you to come into the store, right? We know what window dressing is in that sense of retail, right? Now, take that same psychology and apply it to someone who's managing money. And by the way, I don't blame the money managers. Hear me out. If you're one listening, I don't blame you. It's your average retail investor, Andy, that's going to look at their year end and say, wait a minute. I heard that PLTR has been on a tear, right? I heard that such and such has been strong. I was tuning into this particular podcast and open up this magazine, and they say this is the place to be. And that's the sort of reason that I don't blame the money manager folks. I actually put this squarely on the lap of those folks who are just looking for that performance chase. So maybe window dressing and performance chase, whichever one resonates with you. What is performance chase? I mean, literally take that in your mind. Okay, this is what's performing, and I've got to put that into the account, because that recency bias and whatever nonsense is spewed on television is what they're all hearing, and they're going to be unhappy with me as a money manager if I don't have them in those positions. Now, one of the things that retail traders and investors, and gosh, sometimes, sadly, sometimes not even just retail, your average, sometimes even a little bit more savvy traders and investors. What is your cost basis? What was your cost? Where is your risk calculated from? Where is your reward calculated from? A lot of times folks don't even care. Hey, you have S&P long. Great. If someone has S&P long from 58.50, right? Or let's say we're talking about the SPY. Let's say someone's long from 58.50, or let's call it 585, right? And you're long from 610. Both are long S&P, but from a very different cost basis, from a very different perspective of this climb along the mountain. And that's where most traders and investors, and I will say even traders, are terrible about this. And I see it all the time, sadly. We talk about percentage gains. Tell me where you bought it. Tell me where you sold it. I can figure out the percentages on my own, right? When it comes to scaling into a position, tell me all the places you bought it at. Let's say we bought SPY at 575 and at, let's say on this is probably a pretty common scenario right here. Folks who are long SPY, maybe they chase the momentum higher and they're long at 608. Oh my gosh, here comes Powell ruining my day. I'm long from 588 and I'm long from 585. How do you calculate reward on that? I'll tell you what most folks are going to do. They're going to calculate it from 585. That's where it looks the best, right? Ignoring the fact that, whether they're doing this themselves or someone else is misrepresenting what it is, this is the way oftentimes when traders say, why am I blowing up my account? This is what happens. We delude ourselves sometimes. So, whether we're window dressing ourselves, whether we're getting window dressed by somebody else, we always have to know some basic metrics. And this is something that I talked about in the Friday video, where I said, look, I use a software like TradesViz. It's the one that I'm using. I like it a lot. There's not a bad trade tracking software out there. They're all incredible. Find the one with the interface you like. Find the one that works for the way that you want to break numbers down. All of them will give you some basic metrics. All of them will give you a calendar by which you can look at the year and see where most of your losing and winning trades are coming from. I know after years of doing this, the toughest part of the month is the very first handful of trading days. That's by far, if I'm going to have losses, it's going to be in those first, call it 3-4 days of the month. I know someone on this side of the mic, someone on the camera actually admitting to losses. Go figure. I must be the only one. Everyone else is out there winning. Back in the real world, where we don't need to put those knee-high boots on, ask yourself where consistently in the month you lose. Same thing could be intraday, right? Same thing could be intraday. Are you making your intraday trades best in the beginning part of the day, the latter part of the day, the end of the day, right? You can only do that when you run it through trade tracking software. But here are the two most important metrics. What is your average win size? Not your greatest hits. Everyone's going to parade around their biggest trades at the end of the year. What is your average win size? What is your average loss size? And last week I mentioned, I think I did it in the free video and the premium video. I walked through the 4 quarters. I walked through my biggest months and my worst months, right? And my job as a trader is not to have home runs. Even though that's become very normalized, it's just simply not true. Home runs are basically you have 5 at bats, you strike out 4, you hit 1. And you might say, Rob, can you make money doing that? Yeah, as long as the 4 strikeouts weren't huge losses and the 1 home run can not only make up for the losses, but then grow the account. So these are all things that I think when we start to look at our numbers through trade tracking software, we get realistic about what it means to grow an account, not pat ourselves in the back for a home run. We start to realize, we're usually thinking about this all wrong. Window dressing could be part of it. Performance trades could be part of it. Getting caught up in what's talked about on television and not what's actually happening on the charts could be part of it. I mention all these things because as we go into 2025, it's going to be really important to abandon those things that we know didn't work. It's hard, right? The 80-20 principle that's been written about a lot is really hard. Can you go all in on the 20% of things you're doing that are creating most of your results? I don't care if you're reading books about 80-20 principle, Pareto principle, even Tim Ferriss, 4-Hour Workweek, by one of the most widely read books in the last decade or whatever, talks about, do you have the discipline and frankly, the courage to say, hey, look, 20% is what's working. This other 80 I'm doing either for hoping it'll work or for fear if I stop, it's going to affect my bottom line. In our case, our trading results. The fact of the matter is, those are all there for reasons either of, gosh, I have this indicator, so I better use it. I took this class, so I better keep persisting with it, versus just looking, hey, Rog, yeah, you know what? I've been listening to you all year long talk about buy the dip, and that's pretty much outperformed everything. Can I go all in on buy the dip? Try it for a month. Try it for a week. Try it for a quarter, right? And then gauge it for its results. And when folks say, Rog, you're so disciplined to your strategy, this is why. I don't care about the 80% of things that I wish worked or I would like to use. I care about the 20% that are, frankly, keeping the lights on. And we do this in our life. Corporations do this. Traders do this. Investors do this. It's just such a strange part of human nature. So as long as we can put a spotlight on it, we have a prayer. We can do this. We can definitely do this, but it's going to take the hard work to eliminate things that aren't working. All right. So with that being said, um, let's see here. Um, could I explain what? So yeah, Andy, that's the window dressing. GR says, last time I said I should, yeah, GR, most of the time, a lot of these discussions are happening with the real market and trades we have on in the Sector Secrets Mastery. We're going to have an immersion that we'll make available come February. But as far as a sale goes, right now it's 30% off. GR, you can join the mastery for 30% off. Yeah, that would be your bet. You could do that today. And then that would overlap with some of the immersion. So definitely take advantage of that. I'll be going through a lot more of the results from 2024 throughout January. So you have a better idea of what we did, a better idea of the kind of positions we put on. And then come the immersion in February, I want everyone to be completely informed about what we do in the mastery, what their expectations should be, and what our worst month look like. Here's something that would be really interesting. And I'll talk about this through January. For as much garbage as you're going to have, these were my biggest winners from last year. How about these were my biggest losers from last year? I'm happy to do that. In fact, I can know off the top of my head, my biggest loser, and this happened once, was just over 50% of premium paid. It was a loss of almost 3% of my account. That was my biggest single loss of the year. So if we then go back and start looking at not the biggest winner, because that just makes us feel good, but what's the thing that's kind of sweeping your legs out from underneath you, right? Karate Kid, sweep the leg, right? What is it that's doing that to your account? Find those biggest losers. Find what symbol they were in. Find what month you put them on in. Find what strategy you executed. And those are things that if you do persistently, and I teach y'all how to do that, you're going to find some of the mistakes aren't huge mistakes. They're just back to that 80-20. Can I abandon the things that I want to do that I know I really shouldn't? And can I be disciplined to the 20% that grows my account? All right. So yeah, if they're on sale right now, GR, Mastery, daily price movement ranges, hourly price movement ranges. Yeah, take advantage of the sale. All right. Next up is, let's see. Bear with me here. Let me catch up the rest of the questions here. So yes, what I want to make sure I really get across to everybody is and I'm grateful everyone's here for Charts and Coffee, but I will tell you this. If there's a time of year where you're going to say, Rog, is there anything that I need to do at the end of the year that's suddenly going to make the year positive? Here is the Toys R Us, and they're not here anymore, are they? But here's the Toys R Us mentality of trading that's really, really dangerous. So I don't know if this is exactly true, but I think it's mostly true. So Toys R Us would pretty much operate at a loss or just kind of, treading water through the first 10 and a half months of the year. Come November, December, that was their year. That was where they made their money. That was where, who's ever been, I'm so dating myself, but who remembers going to a Toys R Us in the middle or end of December before Christmas? I mean, you need like a Navy SEAL, Green Beret kind of mentality to go into that place. Why? Because everyone was buying their stuff. The rest of the year, they go back to just, and that's where a lot of traders think, oh, it's the end of the year. I've got to put on all these magical. No. Whatever's been done so far this year, the way that I teach my mastery folks, the way that I operate, we had a fantastic November. We had a pretty darn good December. I'm not trying to put a exclamation point on the year in some of these illiquid times where price action's weird enough because Jerome Powell sort of put a huge question mark over the next set of rate cuts. There's priced in right now 1 to 2 rate cuts by the time we get to May of next year. We'll see what happens. So there's a huge question mark over monetary policy, which means macroeconomic uncertainty, right? Jerome woke up last Wednesday and chose violence. He just really wasn't willing to let traders believe that come January, they're going to persist on the same track. All right. So then the next thing is the trends that we've had this year, they're done, gang. If you look back at the year and say, Rob, what can I do now? And I don't mean this to be sour grapes or even to be a pebble in a shoe. But I want everyone to look at this year and go, Why was I bearish for any prolonged period of time at all? And what did advice like that cost me? Right? There's a lot of bad advice out there. There are opportunity costs out there. Picking a top was about the dumbest thing anyone could do all year long. Sure, every now and then it felt great because maybe you were right. Home run hitting. Do you think if we talked about every dip versus picking tops, which is not a high probability setup, do you think buy the dip outperformed this year? When we see a trend and it's moving higher, don't let the naysayers talk you into, oh, it's not going to keep doing it. Please don't, right? That's going to cost you money. So take a good look at the year and go, okay, next time I have a quarter like 2024, quarter one, next time I have a quarter like 2024, even quarter three and quarter four, I'm going to just stick with the trend and I'm going to buy the dip. Heck with whatever anybody else says on television, right? Heck with whatever anybody else says about something being overbought. It can't go higher. The heck it can't, right? So those are things that, again, sometimes when we make a mistake, let it sink in for a minute. So the next time we're tempted to start to believe somebody when they say this is the top, we're not then suckered into that particular strategy. I even loosely call it a strategy. We're not suckered into that strategy, or worse, we're not taken away from the thing that has been working. And those are really, really tough. Those are tough things. I don't want to simplify them. It's really hard. It's really hard. But I'll tell you, at the end of the day, you want to be right, you want to make money. That gets said a lot. I will tell you, most traders I hear talking about what's going on and predicting why Jerome's right and predicting where the markets are going to go, they don't want to make money, not more than they want to be right. And you might think to yourself, who wants to be in this game to not make money? Plenty of people, gang. You can see it by their behavior. Don't let their words, right, tell you what they're doing. Watch their actions. Watch their actions, and you'll see, wow, the vast majority of folks just want to get on television and call the top and call the bottom. Sells newsletters, right? Won't grow an account. So those are things to keep in mind. And if you're going to err on one side or the other of market behavior, be bullish. Yes, when people go, the market's rigged. Yeah, they're rigged to the upside, gang. Absolutely. That's what they're rigged to. And this notion that, the retail trader can't do this, that's where I say, come into the Sector Secrets Mastery. It's the largest mastery at Simpler Trading. And you're going to talk to nearly 1,000 people that are saying, yeah, the reason that most retail traders don't make money is the folks in the mirror, right? The person in the mirror, not the algos and the systems and the hedge fund managers. It's not that, right? Those are excuses for losers. And nobody here is watching that. When everyone says, I'm not winning because my commission's too high, my brokerage, the hedge funds, the systems, the algos, the high frequency, the list goes on, right? You know what's going on. It's me. When I'm not trading well, it's me. Okay. So there you go. There's your pep talk or your anti-pep talk for the day. We can do this. We just need to behave in ways that most folks are unwilling to behave, right? You want things that most folks have, you're going to have to do things most folks aren't willing to do. And I know that's who you are, because you're here on the 26th at 9 a.m. to try to learn a little something from someone who's made those mistakes. Hence, she can talk about them from a first person perspective, right? All right, gang, be good to each other. I'll see you tomorrow. Same time, same station.